Hey, I'm Gene Goldman. Here's a look at the week ahead for the week of January 1st. First of all, I hope you had a wonderful new year. Cheers to a great 2024. So recapping 2023, U.S. stocks were higher. The benchmark S&P 500 was up 24.23%. This more than erased the 2022 losses that we saw in the stock market. And the S&P 500 ended about 0.5% from its January 2022 record lows. The overall performance driver last year was that we saw huge rallies by several mega cap tech names, the so-called Magnificent Seven stocks. So turning to the first week of 2024, it's an important week for the stock market direction, and will this 2023 rally continue? So three areas we'll focus on. Number one, we get a lot of key economic data that provide us the first look at December's economy. For example, we get the ISM surveys on Wednesday and Friday for manufacturing and services, respectively. Both should show a slight improvement from November's readings. Second of all, we get the FOMC meeting minutes on Wednesday. As a reminder, these meeting minutes show what the Fed says behind closed doors at their last interest rate meeting. Markets today are very optimistic that the Fed cuts rates more in 2024 than they say they will. This meeting notes, these meeting minutes will provide good clarification of what was said behind closed doors at the last Fed meeting. And then third of all, we get the big one, the Friday payroll report for the month of December. This report should show us how fast the labor market is slowing. As you see here, it's been slowing for most of 2023. The markets expect a slowing from 199,000 to 155,000. They expect the unemployment rate to rise from 3.7% to 3.8%. And then most importantly, average hourly earnings to slow from 4% year over year to 3.9% year over year. So the key takeaway is that the stock market tends to price in events about 3 to 6 months in advance. And the stock market, the S&P 500, had a great close to 2023. This week, we get a ton of data that helps determine whether this rally should and can continue. We get some great insights from the Fed, and we get some key December economic readings. Thank you for listening. For more information, please follow us on Twitter at CeteraIM, and see you next week. Thank you.